All right, hey there, everybody. Oh man, good Friday morning to y'all. I'm Christopher Inks with Texas West Capital. Man, you guys have to forgive me here. I've got allergies pretty bad right now, so they've got me all sorts of ways. Anyway, coming at you live from Bernie, Texas, here just outside of San Antonio. It's a few minutes after 11 a.m. Central Standard Time, and we are going to talk about all things markets, guys. We're going to I've got a lot of stuff to go through today. And then I've got a meeting afterwards, so this might run a little bit shorter than usual, but I'll try and get through everything. I've got a couple of interesting charts, I think, that y'all might enjoy, or maybe not enjoy, but at least get a more realistic look at what's going on with the markets, guys. But anyway, so glad to have you here. Who's here already? We've got Nevlusian here. Excuse me, Araquin. Tell you right her name, Mr. Wilkes, Data, Chance Sheridan. What's up, guys? I think that's Diego right there with the blue on blue. Yes, sir. What's up, man? Oh, man, I got red on blue here, huh? What is this? I can't even read who this is. Tomato. Oh, man, I can't even read what the rest that says there. It's way too far over there. Tomato, though. Good to see you. Travis. Al Khalifa, what's up, man? Good to see you here. Hangry Patrick's here. These glasses look good on me. Very professional. You trust me doing doing your taxes? I don't want to do taxes. I took tax law there in law school, man, just to get a good handle on it. And man, my real good friend of mine's actually a CPA. He enjoys doing that stuff, but man, not me. Ross Mark, what's up, man? Mike Slade's here. Good to see y'all. Wazobia Dollars checking in. Hey guys, listen, if you haven't joined us yet, you can do so at howtotradetowin.com. We'd love to have you there. I've got a July 4th special we're going to go ahead and do. Probably releasing it this weekend into next weekend, into the July 4th weekend. That is this one into next one, isn't it? Let me see here real quick. Let me make sure our days here. This weekend into next weekend. Yeah. So we'll go ahead and release something there for you guys. By the way, this is the season of launches with us here at Texas West Capital. I've got multiple projects that I'm going to be releasing, some of them free, some of them paid, different things, different markets. But you guys keep paying attention, man. We get some really cool stuff coming up. There's one that I tried to launch. I tried to get going toward the beginning of this year, but haven't had a chance to really get it out there yet. So that's going to come up here sometime Q3, maybe early Q4. Lots of great stuff, though. So you guys, definitely be paying attention, all right? Let me see here. So, yeah, you can do it here at howtotradetowin.com. And let's jump over here. Well, first of all, here's the Bitcoin short ETF here. The ProShares Trust, I can't even say it, short Bitcoin strategy ETF. This is the hourly chart. It was just released the other day, so not a whole lot of information here, right? Trying to get some look into it. We can probably throw a line chart on there and get a little bit better, maybe. It looks like 1, 2, 3, 4, 5, 1, 2. Yeah, maybe 5 up here. Gosh, I guess actually that might be just an ABC as a 1, 2. ABC is a 3, 4, ABC is a 5, and then ABC, and then rallying back up here now on that 15-minute overbought here, coming up on that 15-minute pivot. Again, really nothing to kind of gauge what's going on with this just yet, guys. Here we are right here. That's the 1 hour. Yeah, just really nothing we can kind of give you here, 4 hours. But it is the ticker BITI. So if you guys are interested in keeping tabs on that, there you go. That's what you can do there, all right? Oscar, what's up, man? Let me see here. Some new stuff going on right here. In case you didn't know, Bitcoin mining firms there sold 100% of their Bitcoin production in May. I think most of y'all know that, right? They were holding on, and then they sold. Let me see here. Let's see. It says, unlike previous months where miners sold a minimum of 20% and a max of 40% of their profits, several of the public firms sold 100% of their rewards last month. So yeah, again, I've talked to this through the last cycle, how you get toward those bear market lows, and some of them go out of business, and then they're bought up by the stronger competitors into the next cycle, right? And so that's kind of what we're looking at now, I think, with some of these, with all these sales going on here. I think they're a little bit better positioned this time around. But a lot of them really taking a hit there. Remember, it's expensive to be a miner, right? Because you have to worry about your electricity costs and all this stuff, and the market price is so volatile. It has such large swings so quickly often. Just ask 3 Hours Capital, right? Man, oh man, I think Voyager had like huge exposure to them, didn't they? Something like I don't even remember how much. Pretty large exposure to them, but it is what it is, guys. Everybody gets in there and they over leverage and they think it's going to go on forever, and and these are professionals, doing this, and so whenever you say, oh, well, this professional says this or that, I mean, you got to take it with a grain of salt a lot of times, guys. I mean, sure, generally they should have a better idea of what's going on in the markets than you do, because they're professionals, right? But that doesn't mean that they know exactly what's going on, and it doesn't mean that they can't be wrong, and it doesn't mean that that they're not going to be blinded by their own bias, okay? So, you guys just keep that in mind. There's a fallacy in philosophy which talks about, just kind of saying that something's legit because somebody is certified or, has the degrees or whatever to say so. And it's just, you got to be careful of that sort of stuff, guys. I mean, sure, you listen, but you can't get into trading and expect just somebody to tell you, to make your money for you. If somebody can do that, realistically, they're going to charge you a heck of a lot of money to do it if they're consistent with it, right? I mean, most funds, they're very average, and many of them, often are behind, the Nasdaq or the other indexes. So you just got to keep these things in mind, guys. You can do it better than somebody else can do it for you if you take the time and effort to actually learn how to do it correctly and then get in there and actually do it yourself. All right. But anyway, so that happened. Let me see here. Tell you what, it says not to mention that the miners' machines are cutting edge for about 5 minutes. Exaggeration, but yeah, always something newer, better, faster coming out, right? Oscar says the SPX 4000 gaps closing, last call rally. Yeah, I'm thinking probably. We're getting a good rally today. We'll take a look at that here in just a bit. But I think we may be setting up for that big third wave down. And because the market itself thinks that this is the bottom, right? I mean, sure, there's bearish sentiment, but people aren't actually trading as if it is. So they've got this huge bearish sentiment, when they ask you, are you bearish or whatever, basically. And everybody's like, yeah, I am. But nobody's putting their money where their mouth is. Everybody's still waiting for that big rally, right? That big new all-time high. And not to say that it can't happen, but the things that are going on right now in terms of the psychology of what's going on with everybody seems more like a wave one than it does some new cycle higher, right? So we're still watching that, of course. Hey there, Blaze. Always good to see you. What else we got going on here? Existing home sales or home prices hit record 402,000, but sales fall as housing market painfully adjusts to rising rates. So existing home sales falling for the 4th month straight in May. Now, if you guys will remember, I was talking about how around February or March, I believe that we were at the top of the market and we'd start seeing it pulling back here, which of course is good for me because I'm looking to buy, right? So I don't want to buy at the top. Don't really want to buy near the top either, but we'll see what happens here. And so here we go, right? So this is what we're getting. And there was another article that talked about how even the ones that are being bought now, the size of the mortgages are much smaller than what they were. So not only do we have less sales, but we have smaller prices, right, of those that are actually being sold. So, again, guys, it is what it is. We told you about this. That, in the grand scheme of things, really I think we're about 6.8% right now with mortgage rates, somewhere right around there. And really, if you look back over the last few decades, it's about, about average. It feels really heavy now. I mean, it feels really expensive now because we were down at 2%, which was absolutely stupid lows, right? So if you bought a mortgage back then, congratulations, man. But, buying right now is historically around the average rate. And so, but, again, people feeling it. And then, of course, with the economy potentially kind of running over an end here, people having to be more concerned about their jobs and are they going to lose their jobs? More and more companies cutting positions, handing out pink sheets. There's a lot of what's going on here, is stuff that we've been talking about the last few years coming to a head, right? So we'll see, is this just a temporary thing and it goes on, or is that it? Is that really it? I still lean toward that's really it. So we'll see if we can get some confirmations, further movements and whatnot, right? Oscar, you think that the markets need a breather, a 1 to 2 week rally possible across the board? If it was a 1 to 2 week rally, that would suggest for the indexes basically a leading diagonal coming off the, if it's Nasdaq November 2021, or if it's, S&P or Dow, you're talking about like January of this year. You're talking about like a leading diagonal off that. I think you'd have to have for a 1 to 2 week rally. But all that means, that's a setup for that big drop. That wave 3 is where everybody goes, oh crap. Everybody starts, filling their britches because, they didn't expect it. They thought, oh, this is just a pullback before continuing higher. And again, that's what the market seems to be suggesting. Everybody's kind of bearish. Everybody's worried about it, but they're not putting their money where they're worried. They're worried, within themselves, but they're still holding on, hoping that it continues higher, maybe, being what it is. And so if we were to get like a week or two rally, that would have them going, oh yeah, look, it was just a pullback. Now we're going to new all-time highs. And so then it's that drop, that wave 3 that drops down below the swing low right now, that happens after a time where they go, oh crap, I'm in the wrong way. And that's when you see the sell-off really start advancing, because that's when everybody that was holding on starts getting out. And then everybody was already thinking it's getting out, already have their shorts in there going short. So it's just pushing that price down, right? So yeah. But anyway, so remember, this is the average over the US here, 402,000 is the average. Some of you guys more expensive areas, some of you guys less expensive areas, but nonetheless, things still happening that we were already looking for there, right? Here's an interesting thing. So if you're thinking, hey, we need to get this, we're getting a new all-time high. Here's the thing, guys. Stock market set for worst half-year performance since 1932. If y'all remember, 1932, about that time was when that stock market low hit from the Great Depression, in the Great Depression. Dropped off from 29 to about 32, from 1929 to about 1932. Recession threat will dictate second half, Deutsche Bank says. But yeah, so they're talking about the large cap benchmark has dropped around 22.3% so far in 2022. And that is the biggest drop since 1932, right? It says chart below, see chart below, but I don't see a chart below. Nope, all this fun stuff here. So I don't know. But yeah, I mean, again, not surprising. You can say stock market is not fully pricing in a looming recession, says Morgan Stanley and Goldman Sachs. Of course, that aligns with what I just said there, right? About everybody feeling bearish, but nobody, a lack of people actually conviction in that bearishness. So yeah, I mean, there you go, right? People say, oh yeah, I'm worried about it, but then what? They don't do anything, right? Crazy times, guys. Be careful out there, all right? All right, let's jump on in here. I still like this 3-day chart here. This is the BLX 3-day here. You can see that we got the bounce right off this demand structure, which has the EQ right around the 3-day S2 pivot here. I like that. Definitely want to see follow through up. You can see there's a whole bunch of ease of movement here. So you can really just kind of ratchet on up into those upper 20s there, if we can get that, right? So we just got to break out through this area here, and that's what it's trying at the moment. You can see on the 3-day here, bouncing off the bottom area here, rallying back up, trying to cross bullishly, and then we'll look for a breakout of oversold. And of course, over here, you can see we're well oversold here on that 3-day. Now, I mean, if you want to, you can probably watch some RSI here. You can look for a close above like this right here would be your first real hint that, hey, you know, first clue that maybe that bottom might be in. So you get a close above this 3-day resistance right here. You can see, again, the volume and price action here as we came down. So even though volume was a little bit less on this 3-day than what it was previously, there's a significant difference in the size of the candles. So this candle spread, the body of the candle here is about $6,265. This one's only $1,698. So, you know, less than a third of the size, but the volume's almost the same. So again, more effort, much less result. Again, a little bit more or less volume, but completely flipped the script here. We got this nice long-legged doji over here. Almost a dragonfly type doji. But once again, just a little bit less volume, completely flips it though. So you see as we go through these 9 days here, these 3-day candles, you can see that you're exerting more effort in general, relatively to the previous candle, but getting less result until it flips there. And here we are on this 3-day, which began when? This began on the 21st. Oh, so this one closes today. So even less volume down here and kind of pushing up here a bit. And that's what you kind of look for. But we do need to see follow through, guys. It's not enough just to see it. You've got to get that follow through as well on that, okay? Too bad real estate prices in Salt Lake City aren't really budging yet. Yeah, they'll come in. They'll come in, guys. You know, again, this is average over the U.S., but you'll be feeling it. Some markets will take a little longer than others. Oh, geez, oh whiz, I do apologize. That might show up all throughout this stream. It's sneezing from the allergies. But anyway, so yeah, looking good here. I mean, really what you want, if you're playing large term or larger time frames, guys, you're looking for a breakout above the S1 and then the pivot. If you can get that, that should signal that you're heading up here, most likely to a new all-time high. Okay? Locally here, what do we got going on? Well, so we've got this move here. And okay, so I had this descending channel resistance here from the top to the bottom to the top. And as you can see, we're back up and through it. So it's not really doing a whole lot of good for us. So we're going to go ahead and get rid of that. But here is what is working good right now. We've got this thick red horizontal line here, which we've been watching, giving us the breakout. Now, right now, it is, I'm looking at this possibly as a 1-2 here. This is what we've been doing with the Discord. And looking at this as maybe a leading diagonal for wave 1. And then potentially wave 2 on the pullback here, or we've got this alternate red count here, which says ABC, which would come right around this area as well as maybe like a flat correction for wave 2. All right. Now, if this is a 1 and just a deep 2 right here, pulls back right into this area right here. Watch this. Let me pull this over. Right there to that EQ, right? So if this is 1, 2, 3, 4, 5, and then ABC maybe. Actually, I'm going to have to move that wave 3 there because we did get, I was looking at the 78.6 on that retracement. And we've hit basically almost 90%. That gives us a wave 3 target there of 12,955 or so. Not 12,9, 21,955. Kind of that area for wave 3. All right. As long as this holds as wave 2 down here, that gives us a, well, as long as this holds as wave 2 here, that gives us a minimum expected wave circle 3 target up there of 23,300. And as long as this larger degree wave 2 holds down here at 19,751.5, that gives us a minimum expected wave parentheses 3 target up here, Roman numeral 3, at right around the weekly S1 pivot, which is 26,218 kind of area. So that's kind of what we're watching there. Again, as I showed you on that 3-day, I said, the big candles going down on those 3 days should give ease of movement up once we get through this kind of area here, up into the upper 2,000s or 20,000. Oh my gosh. Yeah. Upper 20,000s here. So, again, just kind of watch this. Now, the other possibility is maybe somehow, again, we're looking at this with Discord. Maybe this is a leading diagonal here, and then maybe this ends up being an ABC here or something. So if we get a breakdown below 19,751 and a half there, we're going to come down toward this this box down here, which is about 18,780 to 19,135 or so. It's basically your 61.8 to your 70.5 retracement. And this blue structure is the daily demand structure here. So coming in right at the top of that, hitting that, would give us that wave two, and then we go up. I don't see any reason at the moment to believe that the bottom likely isn't in. What we're seeing here right now is really good. I mean, this is very constructive. What we're seeing here, you can see that we rallied up to basically this support level here, came back, built another base, they're rallying back up, and now we're just trying to break out of this area right here. So again, moving on up here to 22,750, 23,000 kind of area. Give you a little bit of resistance there, but then as you start getting up there, all of a sudden it becomes pretty easy to move up, right? So that's what we're looking there. We're looking at maybe like a let me see here. I always forget where I put that that head and shoulders pattern. There it is. But yeah, we're looking at maybe something like this as a head and shoulders, inverted head and shoulders here. But again, guys, not really a fan of head and shoulders patterns. And, the fact that we're screwing all around this and we haven't broke out definitively says it's not that pattern. The best patterns are the ones where you get that explosive movement out of them and it stays out. If you're sitting there just hovering over the resistance or support line, just drop the pattern, guys. But really what it is, I mean, at the grand scheme of things, I mean, this is kind of what we're looking at here, right? So basically we rallied up to the EQ, came back down to the bottom. Now we're rallying back up, trying on this high volume nodes here to rally back up and through. So, the 15-minute Stochh RSI reset down and oversold. RSI almost reset as well. 1 hour, we get in here. 1 hour, Stochh RSI is almost reset into oversold. Again, I mean, this is pretty clean right now, right? So you've got the resistance and then support potentially here. Just want to see that rallying up further. As you can see here, there's a 61.8 to 70.5 right there. Your 4 hour, we are up and overbought here. Kind of sideways, I think, here. Let me see. Oh, yeah, it was starting to curl a little bit right here. So the last 4 hour was right up here. And the current one's starting to curl a bit, so we could see a cross back over, something like this over here, still an overbought. So not a big deal. We do have room still here on the RSI, which, by the way, is lower highs, which is in line with the lower highs here. You can see that it's that 1 hour, 4 hour pivot that we're kind of pushing up against. So, right here, it looks like we may be consolidating up against it. Again, support being found at the previous area of support and building more base there. So, I know I've seen a lot of the bigger accounts on there, on Twitter and whatnot, kind of saying, oh, it's definitely going down or whatever, guys. I mean, yeah, it could, like we saw, but don't ever buy into that nonsense about it definitely has to do something. Price definitely doesn't have to do anything other than what it's going to do, okay? Don't ever forget that. Let me see here. So daily, Stochh RSI rallying up there. Stochh RSI, let me see here, just about bullish right now, just about breaking out of neutral, getting to bullish. And, of course, we've broken out of oversold here as well. People, they want to see this volume as it breaks out up there, but most often that isn't what you get. You get subdued volume. The volume comes on at the bottom of the drop, into the bottom of the drop. And after that, you can rally up on lower volume. You expect to, because basically supply has stopped coming in. So, people aren't excitedly buying at the bottoms, especially not retail guys. And so the only buying that's going on here usually are the professionals, the larger accounts, and they're not like pushing it up hugely, right? So you've got all this supply that came in to sell it down here, and then they caught it coming in down in this range here. And so, you know, you don't have as much supply coming in anymore. Either it's exhausted or it gave up because it saw that the demand is there. And so then you get this rally, you know, this move up on, you know, much smaller volume. Don't expect that you have to have this huge volume at the bottom. That's a, you know, that expands as it increases, as it goes up. Your expansion of volume usually comes on the breakout. So like if we're looking at this here, it would probably be the breakout of this area where you'd see that volume start to spike up and then the rally up into, again, this upper 20s area up here. So, you know, just pay attention to that. Don't go out there with the sound bites and what everybody else is kind of saying idea. Let me see here. Yeah, again, you know, maybe 1, 2, or, you know, if I'm looking at this, this looks like a flat. It looks like a 1 and then a 2. And then it looks like 1, 2, 3, 4, 5. But that wouldn't be, because if it's going to be a leading diagonal, it should just be ABCs, no flats, stuff like that. So, you know, this would have to be 5 here, or, you know, an ABC and then a back and then an ABC and then a back, and then you get an ABC up if you want a leading diagonal there. You know, maybe it's a 1, 2 here with a 3, 4, and a 5, in which case this is A, B, and then of course you're looking at C down here. But again, you need to follow through. So either way, you know, whether this is a 1, 2 or whether this is an A, B, C as a kind of expanded flat here, I think we're still heading up for right now. Things change if we drop down below 19,751.5. Then that just gets us this orange target box down there that I talked about. So that's what I'm watching. Just curious, but wouldn't we expect to see some accumulation patterns down here on the larger time frames as the big players begin to reaccumulate? Possibly, sure. Let me see here. This, you know, this would potentially be here. Now, sometimes you'll get a sharp move off the bottom and it'll rally up a bit before it creates a range. Other times, you know, if you're talking large time frames here, it's possible this could become a range right here, right? This $5,000 or whatever could become a range, $6,000. So we see a move up here and then a move back down, you know, and then a move up and you know, you can see something like that. So yeah, you know, you could be forming a range right here. On the larger time frame, it's way too early to tell. On the smaller time frame, you know, you get down there and okay, you know, we got this nice rally up off the bottom here, and now we've been sideways since basically the 19th of June, right? So about a week, five days. You know, I look at kind of this swing low area here. So right from this point, the 19th of June, to where we are now, we're kind of just doing this sideways. So that could be a little range adding into another range. You know, if I was to look at this, I would say probably like this would be like your preliminary support, selling climax, and then, you know, quite potentially this could be your automatic rally, and this could be your secondary test, and you move up and then you come back down here. But, you know, locally here, this could potentially be your automatic rally to this area here, or even this one right here. You know, and then your secondary test on the pullback, and that's your thrust up, and here we go. Again, in this case, you know, maybe pull back to a larger wave too. You know, in this area here. And then you get like some kind of ascending accumulation here. And when you have that ascending accumulation range, that's the result of overly aggressive buy or really aggressive market buying and or a lack of market selling going on. And so you just have a lot of demand showing up in the face of supply. And so supply can't push it far enough down to get that horizontal range. So it just ranges kind of going up, doing something like, you know, like that right there, something like that. And so, you know, you get your, if you're doing this, you're probably, you know, selling climax, automatic rally, secondary test, boom, pushes up, comes down. Secondary test phase B, rallies back up, comes back down, and maybe you'll get either a drop below this ascending support to give you a spring, or you'll be inside it and get your last point of support, and then you'll rally up on out of there as it does. And so, you could see that happening as well. Yeah. So we just want to see what's going on. You want to see, do we get this fall through and continuation up there? The Weiss wave open interest bars looking interesting. You're getting a drop off in market selling. You're getting an increase in market buying. So, basically that's a bullish sign. So we want to see if we can continue that up. Looks like we're trying to drop down a little bit further here. Again, the 1 hour is almost oversold there with about 23 minutes still left to go on it. So, could again be A, B, and get a C down here just below kind of in this area. I think probably 20.5 is probably a good area there, maybe 20,400, 20,500 kind of this block right here. If you go across, this kind of area works really good. So I could see us kind of dropping into that and then rallying up, finishing off maybe a wave 2 here and heading up. So we'll see. Let me see here. Some interesting charts. Do I like OBV? Sure. On balance volume, it just, it tries to show you what the smart money is supposedly doing, right? And so you kind of follow that. I mean, if you're into volumes, that's one way to look at it. You can look at your accumulation distribution line, which will often be different than OBV, but it's because it tries to calculate the buying and selling, whether it's bullish or bearish with a different formula. So yeah. Let me see here. Nope, don't want to become famous. Goodbye. All right, anyway, guys. So this is the big picture on the DXY here. And so, we've broken out above this range high up here, trying to find some support here. Your weekly has crossed bullishly. Pretty high here. The idea being either coming off the bottom here, this is 3 here, or this is 3 still forming. Just sideways right now. It's been a real pain in the rear end for any big types of trades in Forex or something like that. Because if it's a range-bound personality right now. I'm looking, potentially we've got a 3 with maybe like a flat, an expanded flat forming. Right here it'll depend kind of if wave 4 is a triangle here. Do we hold this? Do we break out above wave D and B? And then that'll get us that, that'll get us a, oh geez, where am I at here? If we do the height of the triangle there, that'll give us a minimum expected target at around 106.32. But again, this could be an interior 3 and 4 working on this 3 still. So it really kind of just depends on what goes around in this area here. Do we drop down below this swing low? Or do we, continue to just break on out up into the 108 kind of area? If we continue to break on up here to 108, 109, 110, around that area, that to me is going to say this probably wave 3 still going. But if we get a rejection in this area or up here, 107 or so, and we drop down below swing low here, then it would suggest we got a 3 and maybe like a flat, expanded flat, which gives us a 4 coming on down here to around 99 or so. Especially if we get up toward this 107 area back down here and then potentially head up higher. Alts arguably haven't had a true season this cycle. Do you expect we'll see one on a potential retracement for Bitcoin, or will we not likely have an alt season again? Oh, I think we will, sure. I think there's certain ones that are doing all right. I think if you're waiting for alt season, though, I think you got to be careful. Excuse me, because most people getting into that are just looking for a quick buck, right? And that's always dangerous when you're trading that way, right? But I think if Bitcoin is not done, if Bitcoin's got a new all-time high still coming, yeah, you're going to have definitely a huge alt cycle coming in. And I still, I don't think there's any reason not to think it's going to go up yet. That maybe the bottom's not in yet. I mean, sure, you can say that that it's possible that it may fall further, but until it does, there's been a lot of constructive rally so far, and so you just want to watch those levels as it continues to rally, and your new validation and invalidation levels to see if it continues up through that. But yeah, I think if Bitcoin's not done yet, I think we'll definitely have a huge alt cycle coming up. Now, interestingly, XRP and Ethereum have both kind of spiked up. XRP especially yesterday. And so, usually you're going to have all these guys moving together, right? So you're going to have Bitcoin moving with XRP and with Ethereum, right? So let's see here. XRP. Let's see here. See that big move up there? Nice big move. The odds that the bottom's going to be in for XRP and not for Bitcoin are very low, because again, the big ones all kind of tend to move together, right? So we had this nice big move up here. We talked about the idea that it would either be an ABC, kind of like what we're looking with Bitcoin, or we were done here and we were rallying up. And so again, if we were rallying up, looking for this wave 3 up here, it may have come in a little short here because we didn't come down any further, but nonetheless, rallied up through there. If we look at Ethereum, let's see here. Ethereum has this push right here, which is taking it above the swing high. Again, seeming to suggest that we are headed up higher. I've got if this count is correct, we've got a wave 3 target, wave parenthesis 3 target up here, 1548. Which gets you right into this area right here, which makes a lot of sense, right? So, we'll see if we continue that up. Again, people probably looking at the same inverted head and shoulders pattern they were looking at on Bitcoin. Right here. This one being a lot more constructive. I've just got that pulled down there really quick. So this one here having this, this push up right down, and then thrust out with this large. This is what you want to see when you have a head and shoulders pattern, or any pattern really. You want to see a big expansion of volume as you get up through there. There's what it was, and there's what it is as it breaks out, and a large candle spread. That's what you want to see. And so we kind of got that there. If you want to hang on to this pattern here, the pattern target would be, if that's your thing, if head and shoulders are your thing, up there around $1,616. That would be the pattern target on that. So yeah, is still an IHS is a low percentage play at hoped for macro bottom. No, yeah, I mean, all you guys have to remember, all the patterns are is you understand them for what they are, rather than everybody gets there like, oh look, it's this pattern, this pattern, this pattern. Understand, why does the pattern exist? And so if you've got something like, say, inverted head and shoulders, right? So what it tells you is you have your major volume coming at the left shoulder, the residual volume coming in at the head, and then again it rallies up on less volume, on declining volume here. So your right shoulder has lesser volume, but then as it starts rallying up and breaking out, that's where your volume builds up, because now you get that aggressiveness to break out through that resistance, right? I mean, that's really what's going on. Don't think of it as an IHS just because it's it's inverted head and shoulders. Understand what's going on with the market in that area. I mean, if I'm looking at this, we've got this range here generally. We can even look at this range right here, right? So remember what I talked about in Bitcoin, the ascending range, right? I mean, that's more or less what we got here. We got the volume dropping off through it. And then as we start rallying off the low here, the volume starts picking up now. I mean, that's what you want to see, right? So breaking out through this, EQ should be a nice strong move up toward the channel resistance, which will get you right around that R1 pivot. And so generally you would expect if you get a impulsive breakout above the pivot, that price is going to rally toward that R1. Again, you can see that that's right there because you have this range right over here. So, you know, it makes a lot of sense. We'll see if we get the follow through, but it definitely makes a lot of sense there for it. Here's some interesting things, guys. Energy, right? So if we look at oil, told you guys, I got a lot of stuff to talk about here real quick today. Let me get the oil chart here. Where are we at? There it is. All right. Well, golly. Let me see here. Oh, there it is. All right. So oil looks like it may be topped out here. Trying to rally locally here. Looks like we've got maybe, you know, 1, 2, 3, 4, 5, because there's a 1, 2, and then maybe a 1, 2. So 1, and then maybe A, and then A, B, C, D, E is B as a triangle, and then C as a thrust. Get rejected head on down. Wave 3 has a minimum expected target down here of 83.32. Dropping below 95.28 will add confidence to the count. And so if you look at it, you go, okay, well, we've got that going on. And then you look and you go, okay, well, natural gas, right? Nat gas has broken down as well here. It's broken down below my wave 4 here. So I'm assuming that probably wave A here is done. So this is wave B coming down. And so then that would make this wave A of B, or, you know, wave 1 on the wave down. So the idea being that where we're at here should see a rally maybe up here to this wave 4, right around $8, to give us a wave 2 or a wave B, and then we move down. So again, the idea that we've topped out heading down, right? So we've got that potentially with oil. We've got that here potentially with nat gas. I mean, I guess you could look at this, all this sideways. You could also look at it as potentially, I don't know, maybe you've got some kind of flat correction here for a 4, and then so 5 is still coming. That's possible until we get some further downside. So there is that to pay attention to. But right now, looks pretty constructive to the downside, along with oil. And so if we look at XLE here, which is the energy sector, right? This is the monthly. You've got this outside bar, bearish engulfing candle printing here. Now, we've still got another, 6 days left till the end of the month. But man, that's not looking good right there. That looks like drop down, right? You can see that we've just dropped out of overbought here on the monthly RSI, monthly Stochk RSI trying to break down as well. And so seeing that, I think we come down here toward this 43, 46 area. Let me see here. Let me bring this to the weekly. I'll put that back out there on just the monthly. Yeah, I mean, look at this. You gap down, large bearish. I mean, you've got this almost this inverted hammer, a gap down into this large bearish supply structure candle here. Then you've got this coming down. You had your volume picking up right up here near the top. You can see that it dropped down here. It tried to push up here. It just got a little bit more and then just kind of came on down. So not very constructive as far as bullishness goes on XLE here. And so I've got this count I'm kind of looking at the moment here. Again, looking at the move on down here toward this 46 area. That gets you that wave 4 swing low. Wave 2 usually looking at the wave 4 of the previous degree, right? So from 72 basically down to about 46 probably is what I'm looking at minimally. That would be my initial target. Could see it coming all the way down here to the 78.6 as well, which is around $30, $31. But initial target being that 50% area, which is 46, puts it right here with the wave 4, the lesser degree, which is what we usually look for. Comes on down there, right? You'll notice that wave 5 is larger than wave 3 here. It's almost 1.618 times it, right? Almost exactly. And why is that? Well, it's because, something that our Elliott Wave members, after yesterday's training, came to understand. which is that commodity tops tend to look like stock market bottoms. It's the difference between highs being the product of fear or FOMO. So in stock market, people buy in at the top because they keep on thinking it's going to go up higher, going to go up higher. They're excited, they're exuberant, right? Commodities tend to top out when everybody's scared, right? Scared of inflation, scared of war, all those type of things, right? And so that's why usually stock markets, their largest wave will be their third wave, and commodities, most often their largest wave is going to be their fifth wave. It's just a product of human emotion, right? Which is what Elliott wave maps out. And so makes a lot of sense that would be a fifth wave there from back over here in March of 2020. So if that's a fifth wave there, doesn't make a whole lot of sense that the stock market's going to continue higher, right? Because energy is often the canary in the coal mine, right? It kind of lets you know how your economy's doing. If prices for energy are dropping, once they've accelerated here and then they start dropping, it's usually a sign that, hey, there's a slowdown, right? There's not as much demand, right? And so that's a softening economy there. So just some stuff to think about. Let me see here. What else do we got? Copper. So also looking at commodities, check out copper, guys. I've got this interesting count here on copper. These are copper futures. Everybody's been telling you to get in the copper trade, right? I'm not sure we necessarily now is the time to do it. If I look back here toward the lows in 01, right? So this is right around the dot-com bubble, right? We rallied up. And so then you hit kind of 08 here, great financial crisis, it drops down, right? And then it bottoms a few months before the stock market bottoms, right? Rallies back up. So I've got this as a leading diagonal. So I've got this basically as a ABC is 1, 2, ABC is 3, 4, and then ABC is 5 maybe coming up here. So if that's the case, again, looking for wave 4 down here, probably around $2 or so. Initial target. We could see continuing down, the 50 or the 61.8, but the 61.8 is a pretty good area here if we look at that. See, it's got this resistance right here and then support. So I could see it actually coming all the way down there. But again, everybody out there right now telling you now, they've been telling you the last month or so to get into, the last few months, to get into copper. And copper's actually been dropping off. This is the COMEX copper, by the way, not LME, guys. So, we're down from, what, $5 down to three and a quarter now? 3 3/4 now? Excuse me. So, yeah, I mean, I think it's possible that we're there or just about there as a top for copper. So, oil topping out, energy topping out, copper topping out potentially. Gold looking at a double top on that. Commodities don't seem to be pushing it right now. They seem to be dropping off. So again, usually a sign that things are turning around, right? Going the other way. Let me see here. What would I say the Weiss volume is showing on the 15? Oh, I tend to not watch a whole bunch of stuff on the very short time frames when it comes to those type of things. Right here. But you can. What you look for with Weiss volume is you look for this, is it generally increasing or decreasing? And so, again, this is increasing here, and then it increases on the green side, right, as we make it off this bottom here. So you get to this point, and your largest, and it slows down as you get to the bottom, right? Which is what you expect. You expect less market selling. You expect your market selling to kind of die down as you get toward the bottom, right? Usually you have your highest bits of volume coming right before the bottom, right? It comes at on Wyckoff would be our preliminary support. And then often your selling climax is less volume, right? And so that's what you would expect to see through here. And then as price rallies, you'd expect to see it dropping off, and you'd see the your market buying there kind of increasing, your open interest increasing as it goes with it. And then here, it shows that your open interest is decreasing as you're coming down here, right? And so, and then it dips a little bit further here after that. And at this dip here and rally back up, the green starts picking up. So open interest, you have people buy in as that price starts rallying up more. So yeah, 15-minute kind of says that. That's what we're looking for. So we'll see if we can get this rally up, be done here. Maybe, like I said, just a deep 1-2 for that 3 up there. Yeah. Let's see. What else do we got for you guys? Oh, I got to get going here. Take a look at Nasdaq real quick. Let's find the right one to do here. I'm going to put it right on here. There we go. So I've got a, we had a, oh man, that didn't even pull back. So we could see this potentially filling in the gap over here, this 10th of June gap. Up here at around the 70.5. That's what I told Discord. If it continues up through this area and continues up there. A breakout above this swing high up here at 23.20 and 12 cents. I think that may suggest that maybe we've got a leading diagonal coming off the top, so we would have much further upside on that. But we'll have to see if it plays out. Right now, still kind of looking at this idea as a wave 2 here. And it hasn't even quite retraced 61.8 yet. Come back down. So looking for that to break back down through basically the 23.6 here at 10.955. Doing that should indicate, hey, wave 2 is probably done and wave 3 is in progress. And then that'll be that larger wave, wave 3 of 3 of 3 kind of thing as it's coming down. That's when you see people start kind of really selling in because they go, oh, crap, But if it does break out above there, that increases the idea that maybe we've got a leading diagonal coming off here, right? Maybe like a 1, 2, 3, 4, 5. In which case, then, at least a target up here of the 12,300, but could potentially get on up here, 13.5 or something. So we would just have to see, do we get this breakout above here or not on that. Same idea for your other, indexes here. There we go. So I've got a current target right now of this orange kind of structure, supply structure here. But again, like the other ones, if we continue breaking out above, wave 2 up here, that would suggest, again, leading diagonal, and we're heading up decently higher. But again, even with that just becomes a wave 2, and that wave 3 on the breakdown through the swing low here is where you see the market all just piling in for huge shorts. So yeah, we'll see if we get a rejection here and drop back down through wave B. Let's see here, A, B, C, D, E. Yeah, wave B support right here at around 37.45.75. We can get a drop down through that. That should suggest that wave 3 is in progress lower. Dow, of course, being the broadest based of the 3 indexes here. Looking again quite similar itself. It does have this gap up here. We just filled in, or just about filled in, this 13th of June gap. But we could end up going up here and filling in this 10th of June gap as well, as if we continue up here. So kind of looking at, right now, I'm looking at the idea that maybe 1, 2, 3, 4, and then we get a 5 up here toward that 31.495 kind of area. But what you're going to look for is a breakdown below wave B here at 31.66 to kind of suggest, okay, wave circle 3 is in progress lower. But as with the others, if we break out above this wave 2 up here at about 33.272, again, that's going to suggest potentially a leading diagonal. And then we should look for price to, possibly get up here around 34 and a half to finish off a wave 2. And then we get that huge move down for wave 3. Hey, Blaze, have a great weekend, bud. Let's see here. Eric Wayne, you're a huge advocate for physical metals long-term, but what is a good paper metal to trade, especially silver? Would that be SLV? Yeah, so silver, if that's your belief and kind of what you're looking to do, right here is that silver chart. It's right here, SI1. Can't say it here. Exclamation point there on COMEX. That's what we're looking for there. As you can see, it hit my wave 5 target area down here. Looking for a minimum wave 2 right around this. This is that big range up here. The big range support. And continued up through there. Look at this wave B resistance right there at about 21.32 there. But yeah, I mean, you know, again, if it does break out above wave 2 here, that'll invalidate the count. But right now, still kind of looking at this. Now, you know, is there maybe a double bottom in progress? Sure, potentially. If we get a breakout above this swing high up here at 22,565, right at this EQ area, you know, that would lend to the possibility we got a double bottom here. You want to see an impulsive breakout, like I was talking about on the inverted head and shoulders. You want to see large volume, large candle spread. That would give you a pattern target of right up here at around 24,955, which gets you just right below the weekly pivot. Now, you know, again, possible maybe 5 waves down here. Sure, maybe leading diagonal type thing. Let's kind of zoom out a bit. But that would just be on this right here because the top is way up over here, right? And so I've still got this here as a 1, 2, 1, 2, or if we break it out here to be, you know, 1 with an A, a B, and that would be a C for a 2 up here. So 1, 2, 1, 2. Again, 3 of 3 breakdown. I don't have any reason to change my silver targets right now. Still looking at below 10, potentially right around 7 or 8. Gold, still looking for potentially a breakdown. Excuse me, below $1,000, maybe targeting about 850, 900. Gold, though, has the possibility, you know, that it could get a reversal around 12.5, 13. But yeah, you know, nothing really changing on all this. You know, I think sometimes as traders, we get all caught up in the short term and we forget to zoom out and look at the bigger picture. To make sure you guys aren't doing that. Make sure you're always looking at the bigger picture so you have, you know, it helps kind of give you a possibility of what you're looking at shorter time frames as well. Queen, you're welcome. Sure. Let me see here. Yeah, SLV probably all right. Silver stock to trade. Yeah. If you're looking to do that. Guys, the things I like about futures, man, if you don't trade futures, I don't know what's wrong with you. Seriously, man, futures are great. Futures are fantastic because it's just a little bit of money and you can get a lot of return with a little bit of movement. And so you trade things like the S&P E-minis or even the micros. You know, do it with silver or gold and whatever. And you know, again with those, remember if you're in the U.S. And you're trading stocks, you need to be aware of the pattern day trader rule. And so that limits how much stock you can trade in a period of time and dependent upon your account size. And so, you know, if you're in the U.S. and you're trading, you need to be aware of that. You don't want to run afoul of that rule. But if you're trading options or futures, well, that rule doesn't apply. It only applies to individual stocks. So, you know, again, the most heavily traded futures in the world is the S&P E-minis. And, you know, again, for good reason, right? It doesn't have to move a whole lot for you to make some good money. So if you haven't ever thought about it or really considered it, maybe you should. I'm going to get a whole educational thing together for trading futures for you guys. I've got a partner I'm working with, a company, to maybe get you guys a bit of a deal. But we're going to do all that in there as well. It depends on what I'm trading. AMP is a good place. Tastyworks is interesting. It's a new kind of a newer one. I kind of like it a bit. What do you call it? Large. God, what is that? Not TD Ameritrade. I can't think of it at the moment. It's just completely lost in my thoughts here. There's a larger platform as well. that I've used that works pretty well. What is it? I cannot, for the life, it'll come to me probably here before I get off, and I'll let you guys know what it is. But yeah, so, yeah. Anyway. No, yeah, I was going to say not Thinkorswim. Yeah. Yes, IB, International Brokers. Thank you. Yes. Travis. Jacob Play, man, you were reading my mind. I was thinking Thinkorswim. I'm like, no, it's not that one, though. IB is what it is, though. But AMP is this interesting one. It's something I'm just starting to try out here recently. AMP futures. So, again, if you're looking for something interesting, I kind of like it so far. So, yeah. But man, yeah, futures are really great, guys. I mean, everybody wants to get out there, go to these individual stocks, but man, futures, you can make futures money consistently, right? The good thing about futures is it feels to me a lot like trading currencies. So if you get into individual stocks, you get into crypto, your bias is right and up, right? You're looking for it to increase in value the whole time, right? But when you're trading currencies, you don't do that. I mean, if you understand it, if you zoom out to a chart, a currency chart, most currency charts are just range bound. They're sideways. It might take years, but they're sideways, right? And so you tend to find it hard to get a bias, a real like, oh God, it's got to keep, like your bias is always up kind of thing. I mean, you'll have a bias on short term, sure. But, when you buy Bitcoin, for instance, you're always thinking about it always going up, right? You're not thinking about it, going much lower. Your bias is always that. Currencies seem to affect us differently. We don't really think that way. And so futures are a lot of the same way because you're looking at shorter term trades most often. And yeah, so it kind of keeps you from doing that, which means you can be more into the trade as it's happening and kind of give yourself a little bit of help without, getting too much on the bias side of it. Yeah. Let me see here. Oh. Is it what? Is it ampclearing.com? I think it's ampfutures.com, I think. I'll have to check on that again to what the exact address is on it. It's like passwords, guys. We just kind of put it in there and forget about it, right? And just pull it up. But I think it's ampfutures.com, I think. I'll have to check. I'll let you know. Anyway, so yeah, like I said, just started looking at that and find it really interesting. Let's see. So it's metals, it's precious metals. We looked at copper there, what it's doing, XLE, what it's doing, oil, nat gas, DXY. What else do we look at there? You know what? I haven't looked at Bitcoin dominance in a bit here. Let's kind of look at this real quick. Oh, let's see. Yeah, I think. Okay, yeah. So I think what we're doing. Let's see here. 2. I think 5 may be done here at the swing high. Like a flat correction here. So 5 of C of 4 right about here, which means we've got wave 5 down here toward maybe 33.37, lower down at 28.48, which is your weekly S1 pivot. And generally, that portends a rally in Bitcoin price, right? So usually as Bitcoin dominance is falling, that's usually when Bitcoin's rallying. Generally. So we'll see. I think we've got, it looks like it wants to go further down. We might get a bit of a bounce here and then come further down. Where are we at with Bitcoin right now? Oh yeah, they had a nice rally coming up here. So this is a nice base being built here. Good volume coming in. Looking for that rally up again. Wave 3, 21,955 minimum. Wave circle 3 minimum, 23,300. Wave parentheses numeral 3 there. Minimum at the weekly S1 pivot about 26,218. So we'll see if we can get that rally and that shot and that breakout there. I don't, Again, guys, something I warn you about. A lot of people, they say, oh, well, retail isn't buying and all this stuff. You know, they're kind of saying, oh, this can't be the bottom because retail's not loading up. Retail doesn't normally load up, guys. Don't ever forget that. Retail is spent by the time they're down here. It's your professionals that are kind of buying in and going in. Retail keeps selling the rallies, right? And they'll sell those rallies thinking it's got to continue lower, and they don't actually get in until much higher up. So don't try and define the bottom by what retail's doing, okay? Oh, you have an account there? Same thing, old web address? Oh, okay. Okay, cool. So you already have an account there. Nice. Anyway, guys, so that's kind of where we're at. Let me see here. You know what? Before I go, let me remind you guys of a few things here. Let's see. Let me see here. So interesting stuff going on. Binance US removed Bitcoin spot trading fees. You guys might have heard that. Coinbase shutting down its Coinbase Pro. It's trying to do everything off the Coinbase platform there. But I think more importantly with Coinbase is they're going to roll out its first derivatives product next week with the launch of the so-called Nano Bitcoin futures. And so they won't be doing it themselves until they're regulated as a derivatives exchange. But that article, you can get it there on my Twitter feed there from the block. List the different places where you'll be able to get involved with that. So I think that's kind of interesting. Let me see here. Oh yeah, there's Voyager's exposure to Three Arrows Capital consists of 15,250 Bitcoin and 350 million USDC. 3AC, of course, has not repaid the requested amounts. Voyager says failure to repay by June 27th will constitute an event of default. And then Voyager intends to pursue recovery from 3AC. Good luck with that. I don't think you're probably going to get that, guys. Oh, yeah. Listen, you can still do this, I think, guys, if you haven't done it yet. Let's see here. Here's the link right there. And you have to enter the code TXWC. All right. If you scroll down to the bottom of that page, there'll be a code thing at the bottom. You can enter in TXWC. That's my code. A few of us that are partners with EWI, we got that. It wasn't what they did for everybody. Only a few of us got that code to give you guys. So take advantage of it. Once you, even if you don't have time to look at the video today, it's about candlesticks, the educational video that they normally sell for like $100. But just go ahead and do the code and get in there, because then you have it and you can look at it whenever you want. Don't forget, next week EWI is doing the what is it called there? The now this one is only for a few of us. This isn't something that they widely splattered everywhere. But it's a webinar. Oh gosh, let me see here. There it is. I'll get you the link right here. If you're on our Discord server, go to the announcements channel. It's right there. But it's only for myself and a few other partners again with them, for you guys to get in there. It'll be next, I guess it's Thursday, June 28th. No, what is that? June 28th. What day is that? That's next Tuesday, June 28th. At 11 a.m. Eastern Standard Time. And it's going to be learning how to apply Elliott wave analysis specifically to trading cryptos in periods of intense volatility. Again, you can get that for free because you guys are coming through me here with that link. So go ahead and do that. Even if you can't attend the webinar, sign up for it, because they will send you a link afterward that gives you that you can go to the recording of it. So make sure you guys are taking advantage of these things that I'm able to give for you guys here as well. Everything can't be free in this world, unfortunately. But if there's good information that's free and I can get it for you guys, there it is. All right. So that'll do it. That's what I'm looking at. Again, I think we've got further up with Bitcoin. I think the dollar, more sideways. Again, either 4 in progress or 4 will be in progress. So either way, gives a lot of room for Bitcoin and maybe even Legacy to kind of rally for a bit. If legacy does, again, it would just suggest maybe that down from the top is a leading diagonal, so we get this wave 2 pullback. But then wave 3 happens, man, and that you guys got to be ready for that. You know, if you've got exposure to the stock market. So, you know, you don't want to be behind on something like that, right? All right, guys. I hope you guys have an amazing day, amazing weekend. As always, remember, the only thing you control in the market is how much you lose. That's it, guys. We sit here and talk about it all the time, but that's all you have, guys, is how much you lose. It's all you can control. So make sure you're doing that, all right? Don't play it off as boring or something you don't want to do. I'm going to tell you what right now, the best traders I've ever met, I've ever seen, I've ever talked to are good as they are because of their risk management. Not because they can, you know, do Elliott Wave or Wyckoff or, you know, view the market. It's always because of their risk management. They understand that they're going to be wrong a lot, and they want to be able to make it through when they're wrong, so that way when they're right, they get it up there, right? So make sure you guys are taking care of that. And if you're in Discord, I will see you guys after my meeting here, and then we'll get everything else done for you, all right? Hey, we'd love to have you join us. If you feel an itch, you feel a little froggy, jump, all right? But wait, don't come in today. Or at least not until I get the special out, all right, guys? So I'll release that probably sometime today, and like I said, it'll go on for maybe a week or so to get you in for Tier 3 and potentially even Tier 2. Do special on that too. All right? All right, guys. Y'all have a great weekend, and I'll see y'all next week, Tuesday. Same time, same place. Take care.